What's going on, guys? I want to give you guys a little bit of a breakdown on my strategy using the 2-minute time frame. Again, I know some of you guys like the 5 minutes, some of you guys like the 1 minute. I teach this strategy a lot using the 5 minute, but I just want to show you it works on any time frame. Okay, it doesn't matter what time frame it is, whether you're using the 1 hour, you're using the daily, if you're looking to swing, you're using the 4 hour, if you're looking to swing. Sometimes I'll go down to the 2-minute chart, especially when I want to tighten up my risk, right? Because if we look at right now what an average true range of a 2-minute candlestick is on the NQ, it's around 9 points. Okay, so 9 points, give or take. So I know that if I'm going to give up one candle, a candle and a half, two candles, I'm going to lose anywhere between 9 and 20 points max, right? Max. So what I was looking at, the NASDAQ was doing a fantastic job today, kind of riding higher, higher, higher. As we get into the end of the day, what I was kind of looking for here was maybe we get a little bit of a pullback. And again, this is not, always the best thing to do because you do want to stay with the trend. But again, when you've been doing this for a while, you can kind of get that feeling, get a little bit of profit taking here going into the close on a Friday. Maybe we just get a little bit of a pullback. So what I was really looking at here was this candlestick that closed below the 20 SMA. This was a nice engulfing red candlestick, right? So this really raised my attention. As it closed below the 20 SMA, I want to give you guys a little bit of a kind of a mental breakdown because, again, for some of you guys who may be backtesting the strategy, you will notice a lot of times, 7, 8 times out of 10, there is a period where you're sitting through drawdown. And I want to explain to you that if you are sized correctly, meaning, you're managing your risk properly, you can withstand the drawdown even on the NQ 10, 15, 20 points if you're playing the right amount of size. Now, again, is it great to take 2, 3, 4, 5, 10 mini contracts and try to take 10 points? Of course, but a lot of times, that, especially if you're trading on a prop firm, that's going to tend to stop you out or liquidate your account or blow yourself up, right? So I want to give you this rundown, okay? So the entry for me is going to be below 15,209, okay? I was able to take 524 on one Apex account and $101 on another Apex account. So notice when I got in here on this candlestick, we do pop, right? We do go against my position. Now, again, what's going to be my hard stop loss is going to be a 1-bar stop, but that's a little bit too much for me. What I'm going to do is look at what are some of my other short-term kind of supply zones. I've got the 5 and 10 day moving average here. This is probably also going to match up with like a 9 EMA if you want to use that. So if we were to get any close over these moving averages here, I'm probably just going to cut the trade and look for something else. I get into the trade, immediately go into drawdown here. We do dip. Now I want to kind of highlight something. I want to highlight something. Depending on if you're looking for a scalp and depending on if you're looking for a little bit of a bigger move here, there's one of two ways you can play this. As we start to dip down here on this candlestick, you have to identify that you got a 50 EMA and a Bollinger Band that are rising right here. This is going to be your support. So we get down almost perfectly to this area, give or take a point or two off of this rising 50 EMA. Now, someone could have taken, 5, 6, 7 points here to the downside on a quick scalp and just got out. I, on the other hand, went into profit, started to give a lot of that profit back, went into drawdown once again, and I figured on this candlestick, I was probably going to have to cut my position. Now, again, because I was only playing 2 micros, I wasn't in that much of a drawdown, so it really wasn't going to be that big of a deal. If we would have closed over the 10 SMA, I would have had to take the loss. And if I would have had to take the loss, that would have been from an entry price of 209 all the way up to around 218. I would have lost around 9 points on 2 micro contracts. Very minuscule, guys. We're talking about a $50, $60 loss max, right? $50, $60 loss max. However, we do not close above these moving averages. This is what's hard, and this is what I want to drive home. You have to be patient. When we get into this play, we know our max pains here. We know we can tighten up the stop loss with the close over the 5 or 10 day moving average. We have to bite down. We have to bite down as hard as it's going to take and allow this to go in our favor, or allow it to technically stop us out. And as we get rejected, we come back down, close red, we get rejected off the 5, we put in this low, we put in another low, we come all the way down to the 50 SMA, we bounce. Now at this point, I'm thinking again, okay, is this my second opportunity to kind of get out, right? I'm thinking. And again, I'm always analyzing. So I'm thinking about getting out of this trade here just due to the fact that we're coming into a 50 SMA. And as this candle opens up and we start to break below the 50 SMA, I take one contract off, I hold one, we start to pull back. Again, I've got the 5 and the 10. I'm biting down because, again, trust me, guys, I don't care if you're playing one contract or you're playing 100. Anytime the position starts bouncing against you, you feel that internal rush of emotions. And I feel it on playing one contract, right? So it's like, come on, like just like you're biting down on your tongue. You want this thing to go down. But again, technically, the move's working for us in our favor. So we get rejected yet again off the 5 SMA, and then we put in another new low down here. And this is where I sold. I sold into this 100 moving average here, this 100 simple. We came down into this area, and then we continued to flush to the next area, bounced, continued to flush, and we came all the way down, right? So like I should have bit down a little bit on my bridges a little bit longer. But again, you know, at this point in time, I've already got the first move here, it bounced. I got the second move to the 50 SMA, it bounced. I got my move down here. Again, we did bounce and put in a new low, but I was content. I was able to take, right, with an 8 to 9 point ATR. If you look at the price of where I'm getting in at, below 209 all the way down into 190 is around 20 points. So I locked in about a 2R. If I was willing to risk 9 points on the trade, 10 points on the trade, I got a 2R. So that's a risk to reward ratio, right, of 1 to 2. I risked 1, meaning 1 ATR, 1 candle, roundabout estimate. It's not going to be to the penny, but I risked 1 candle to make 2 candles on the ATR. Again, that doesn't mean that I risk 1 candle to make 1 candle. The ATR is what I'm looking at. The average true range on a 2-minute time frame is 8.5 to 9. So if I'm going to risk 8.5 to 9 points on my potential trade, I want to at least get 9 or 10. That's a 1-to-1. If I can get anything more than that, 20 points, that's a 2R trade, guys. So if I got a little bit more, which it came down all the way to 73 from an entry price of 208, that's around 30 to 40 points. So again, you could have, risked 1 ATR at around 8 to 9 points to potentially gain 3 to 4 ATR, which is a fantastic trade. Because even if you look at it going forward, you would have to lose 2 or 3 trades to even break even or lose the profits that you made on this one particular trade. Now, again, not all ATRs on the 2-minute time frame are 8-9 points. Sometimes they're a lot larger than that, right? It's just depending on the time of day that you're playing and the volume and everything else. But I just want to show you how, yes, a lot of times when you get into these plays, you will be in a period of consolidation or a period of chop. You will be in a period of drawdown, okay? But the whole idea of this strategy is it's a change in short-term trend. So that first close that we get from being over the 20 SMA, notice how we're over the 20 SMA, that first close below is the start of a new short-term change in trend. And if we are going to short-term change trends, it's going to bounce. It's going to put you into drawdown for a little bit as we start to get weaker and weaker and weaker if we're going to the downside. And then we break down to the next demand, which was here. Then we break down to the next demand, which is here. We break down to the next demand, which is here. And then all the way to the final demand. Look at that. How we go from demand to demand to demand to demand. Now, if we were to have more time on the charts and we were to lose this area here, we would go to this next demand down here. It doesn't always work out that way, but it does a lot of times. Guys, if you were interested in joining me and trading with me each and every single day live, getting access to the courses, getting access to a lot more in-depth information on how I'm using this strategy, how I'm using this chart, when I'm looking for plays, how much I'm risking. You want access to the watch list, intraday technicals, live trading where you can get on the microphone or you can listen, doesn't really matter, and trade with other traders who are doing this each and every single day. I only have 2 spots available. Once those 2 spots are filled, I'm going to double the price just due to the fact that I only want to work with serious people. And I know that if I double the price, I'm going to get more serious people who want to join because people respect their money. So again, what I'm noticing is a lot of people don't want to invest in education, which is fine. You can go about it on your own. But I noticed that a lot of people, when they only invest a little bit of money, they don't really take shit serious. I don't want to work with people who don't take shit serious. I'm here to make money. When I trade, I want to make money. When you trade, you should be making money. As a team at Evolution Traders, we should all be making money. And if you don't want to do things correctly and you just want to, gamble your money away, then go somewhere else. I don't want to work with you. I want to work with serious people who are looking to grow and make money as a team, as a solid trading team. That's what I want to build at Evolution Traders. If you guys are serious, jump in. That link's down in the description box below. I'll see all of you guys on the inside. Again, I only have 2 spots remaining. Once those 2 spots are gone, I'm going to double the price. I'm just letting you know that now, giving you a forewarning. I started out with 3 spots this week. I've only got 2 left. Once they're gone, the price doubles and it's never coming back down. Just letting you know that. I'll see all of you guys on the inside.